Good morning, ladies and gentlemen. My name is Marian Dimitrov, and I'm Director of Research at FinTech Global. It's my great pleasure to welcome you to today's dedicated demo stage at the ESG FinTech Summit. Great to see so many of you here in person after obviously 2 years of hiatus and virtual events. But I would also like to extend a warm welcome to everyone that's joining us online and couldn't make it to the venue today. Before we go into today's agenda, I would like to extend a huge thank you to our sponsors and exhibitors who have helped us put this great event together, to the financial institutions who are supporting us and are in attendance today, and finally to our distinguished presenters and speakers who have agreed to share their insights with us today. As you already know, please do download the Brella app. It's the best place to connect with the people that are most relevant for your business and also get the latest agenda schedule for the day. But do so before midnight today, otherwise access will expire and that's not going to let you carry on the conversation after the event. So you can schedule meetings straight here in the networking area or use the networking facilities in the app to just schedule online meetings. With the pandemic and associated economic impact and also the ongoing climate change, it has never, the need for action on ESG topics in financial services has never been higher. So it's great pleasure to welcome so many of the leading innovators in the space today in the demo stage, who will be presenting the latest technology in the market. If you have any questions about their products or solution, feel free to reach out to them via the Brella app or just grab them in the networking area after the session. We will start with presentations from our clients, Meniga and Jupiter Intelligence, who have 10 minutes to present their solutions before we go into the quick-fire 5 minutes demos which were selected to present today on stage. To speed things up, I would like to ask each presenter to just come on stage as soon as the previous demo is finished, and also please stick to your allotted time to just give equal opportunity to everyone. With that being said, all the ground rules are off the table, so I would like to welcome Hamza Bezat from Meniga to kick off this exciting session.
Thank you very much. There we go. So powerful statements by a lot of banking exec, net zero alliances, the reason why we're all gathered here today. I think ESG has really gained in popularity and has got some real momentum, and FS in particular has risen to the challenges of trying to deal with climate change. So what we want to do is I want to run through ways where banks can help and counter and raise awareness of climate change amongst the customer base. And why are banks doing this? Well, really because banks have the data, the infrastructure, and the customer reach to make change. During this process, they can also create real value for themselves. But above all else, it's the right thing to do. Change in this space isn't actually just driven by the FS overlords. We've seen a rise in the number of carbon-conscious customers. In fact, 60% of the customers that we spoke to are very conscious or mindful of their impact on the environment. 70% of customers are willing to spend more on sustainable brands, and 85% of customers are willing to act to counter their impact on the environment. So my name is Hamza Bezat. I look after product strategy at Meniga, and I'm here to share our award-winning and industry-leading solution, which is called Carbon Insight. So our solution is a flexible solution which can be delivered SaaS or on-prem. It's built API first to embed into your digital channels. Now, our carbon calculation methodology is really robust, and it's certified by EY, and it was built in collaboration with global environmental scientists. And what we do is we essentially translate transaction data into a CO2 estimate, and that gives a good understanding or a good idea of what an individual's impact is on the environment. And we do this in real time and localized for any regions that you might operate in. So we don't just provide a carbon tracking solution, though. No, we go beyond this. We provide a carbon experience. And what I mean by that is we first raise awareness of carbon impact. We nudge customers towards better behavior to reduce their footprint naturally. And then as a last resort, offer them the tools to counter the impact that they might have on the environment. So getting stuck into this, I'm going to show by illustration of what this solution might look like when embedded into the everyday banking experience. So here is a mobile app that you might have for your bank. And what the bank can do is essentially nudge their customers to start tracking their carbon footprint. And via a quick and simple opt-in, the customer now has access to that service. So if we go into the carbon section of the app, you can see that you're instantly presented with your carbon footprint. Now, this is automated, and there is no need for any kind of manual input from the user. And we do that because we want this process to be absolutely frictionless, so that you get to an answer very quickly and we can start to raise the awareness. But what you'll notice is, 800 kilograms of CO2 doesn't mean much to the average customer of a bank. So the first thing we do is actually try and contextualize that in a way which makes sense and is easier to digest. So one example which we have down there, for instance, is around what the equivalent amount of 800 kilograms of CO2 is in terms of the number of trees required to consume that per year. And there's plenty of other options to kind of build that awareness there. The next thing that we do is we allow for drill down capabilities into different spend categories, and you can analyze your footprint over time, or as I said, against any one of these categories, whether that's food, grocery, shopping, travel, transport, anything along those lines. We do allow for manual input, though, in the case where it makes sense. So, for instance, in food, you could select that you are not a meat eater, and that is your kind of dietary habit, and as a result, you can see that your carbon footprint reduces accordingly. But going back to the main screen, so the next section here is where we've tried to gamify the process a little bit by adding peer comparison. And what this does is just creates a bit of a competitive spirit, so it helps you track your carbon footprint against that of your community. The next section here is a widget which we've reserved for personalized insights. So this is the real nitty-gritty information about you as an individual and what your behavior is. Now, this is updated in real time, and it can be used for insights such as the first one, like a carbon-heavy transaction, which might have just occurred. As you can see, this one's at Shell, so presumably it's a petrol and gas transaction, and that's why it's important to notify them in real time. But it can also be used as a place to position some of the bank's own kind of eco-friendly products. So that is one space there. However, if you want to position all of those products, we kind of have this Act Now section where we have sustainable banking solutions which are available for the customer. And if you click on that, these are just some examples of ones which our customers have used. So it can be anything from green savings loans to kind of electric vehicle loans or even solar panel loans. So that's reserved for positioning of banking products. But we recognize that some carbon consumption or carbon expenditure really is unavoidable. So in that instance, we provide the tools for the user to offset against verified projects. Mainly, we've worked with the UNFCCC and spoken to some people on the ground to find out what they're actually doing and their day-to-day involves, and we partner with them to offer some kind of offsetting solutions. So once again, going back to the app. So that's all about kind of acting now and countering the impact on the environment. Now, the next feature which we have here is something which we call carbon rules. Now, what this is it's an automated mechanism where the customer can define a certain number of rules, which essentially taxes their kind of carbon-heavy transactions. So it gives you an estimate of how much you could potentially save as a result, and we can activate that as a carbon rule. Now that's set. So anytime that there is a carbon-heavy transaction, money will automatically get transferred into a savings pot, which can then be used for either offsetting or just general rainy day savings. And then lastly, here we have a section which is reserved for carbon information. So this is about articles, advice, tips, any kind of pragmatic information which a user can use to naturally reduce their footprint. And there's a lot of good information here. So whilst this is just an illustration of whilst this is just an illustration of what it could look like, these designs have actually inspired the implementation of this solution across a number of our clients globally, particularly within Europe and the Far East, where we've seen really good uptake of this solution. It's been hugely successful, so much so, in fact, that 50% of the customers of our banks have opted in for this process without any kind of marketing or campaigning. Of that 50% that opted in, 80% are deeply engaged with it. And what I mean by that is that they analyze their carbon footprint over different time periods or spend categories. So as you can see, it's working, and there's good uptake and there is good demand. We've also seen some very flattering reviews in app stores where customers have said that they are super impressed with their bank for being so innovative and forward-thinking and providing such a service to kind of their end customers. So just to summarize, again, what we do is we build a solution which helps raise awareness of individuals' impact on the environment. We then nudge them towards better behavior to counter that impact, to not have such a bad impact, and then provide them the tools to counter that impact as well. So that's the kind of solution that we do. And we think that if you do this right, we're confident that banks can achieve the right kind of outcomes as well. So first of all, you'll be able to attract an increasing population of carbon conscious consumers, which is a huge growth segment. Secondly, you'll be able to create a more loyal and engaged customer. And lastly, you'll have the perfect platform to position some of your eco-friendly banking products or sustainable investments. So my name was Hamza, I'm with Maniga, and again, please, if you're interested in any of this that we just went through, speak to myself or one of my colleagues, and we'd be happy to collaborate with you and discuss how we can create a greener future. Thank you very much.
Good morning, everyone. So I am here representing Jupiter Intelligence. So we're going to see this slide in various fashions quite a lot today. So perhaps it'd be good for me to just highlight what we're seeing from a Jupiter perspective and where we tend to find people at this moment. So I would say our more advanced clients are somewhere between 0.3 and 0.4 there. So it's a strategic priority at the moment. However, they're implementing it into certain parts of their particular business, whether it's on a particular portfolio on the banking side, or if it's a particular use case, whether regulatory reporting, or more, for example, risk management, and moving towards the actual full integration. But we're yet to see it across the full integration side, but we are very much looking forward to and working with our clients to get them there. However, we're still seeing a lot of market participants on that 0.1 to 0.3, and that's across the entire market, everything from oil and gas companies to insurance to banking. So it really depends on where you are at the market, but we've been helping all market participants wherever they are in this journey so far. So, Jupiter Intelligence, what do we do? So we're the world's best climate risk information provider and their economic impacts. We work across all the 8 dimensions you can see on the left-hand side there, each with their own set of behavioural characteristics that we can forecast out to 2100. And we do this across 2 lenses. So you can see in the centre there, you have portfolio level, and you also have facility level resolution. Portfolio, it's a wonderful ability to screen an entire portfolio at a 90 by 90 metre grid resolution. And then we can also drop down to the facility level, which is 3 metres, and that's for your more typical risk engineering project, really critical assets, for example, an oil and gas company looking at particular refinery and understanding within that refinery how much to elevate an oil tank to save it from flood over a 5, 10, 20-year basis. So as I mentioned already, we work across the full spectrum of clients at the moment, everything from oil and gas to the utility sector, probably started more in the utility sector about 5 years ago with that facility level resolution. But over the last 3 years, the financial services industry has been a major aspect for us and is now the bulk of our clientele. This is obviously for our own internal development at the portfolio level analysis, but of course all the regulatory and internal push from the banking, insurance, asset management and real estate community as well. So just wanted to touch on why our clients tend to turn to us and what makes Jupiter really Jupiter. First and foremost, on that pillar on the far left-hand side, you can see our science. It's very critical to everything we do at Jupiter. So our global climate science team accounts for 35% of our staff. We do this very consciously so we can keep our finger on the pulse of global climate consensus and all the different robust methodologies going on. So you can see here in the top left-hand corner that we use the CMIT-SIP models, part of the IPCC's 6 assessment, rather than the CMIT-5 models, so they're the more robust, pragmatic models going forward. And we also use a combination of around 15 different global climate models as well, rather than 1 or 2. So we really have a global, diversified approach, which will give us that level of sophistication when dealing with any particular use case or portfolio going forward. However, even with the global climate models, there tends to be gaps when looking at a bank or insurance company's portfolio and use cases. So we also step in where there's been particular gaps on the tropical cyclone models, so we create our own proprietary modelling capabilities as well. Particularly for this community today, transparency always key. So we don't believe in black boxes at Jupiter. We have a complete open methodology for all our clients. So whether that's on the actual methodology side or the data output side, so you'll see all the raw data behind any one of our perils, any of our scores, or financial modelling capabilities as well. Moving to the third pillar on the actual data side. So I've mentioned we have that 90 by 90 meter grid resolution. So within that, we have over 7,000 metrics, which is a lot. And I can't imagine any one person in this room would actually need that much. But what it does ensure is you have all the data you do need off the bat, as well as that has actually grown from 3,000 this time last year. And the reason for that is there's a lot of different use cases out there. There's a lot of different portfolios, a lot of different geographical coverages where each metric can be very important to a particular entity. And we're really conscious of listening to that. And we have a very short product roadmap so we can listen to our clients and act accordingly and add new metrics on a quarterly basis for them as well. On the enterprise level, we're actually very flexible on how we deliver this data, whether it's API, CSV, or data exchanges. Really depends on what the end user would like to see. And we're very much platform agnostic. So we have ready-to-go dashboards, of course, whether it's for TCFD reporting. But we also work with our clients to make custom dashboards so we can fit into any box that you would like, basically. So as I mentioned earlier, we have the 2 different lenses. You can see on the left-hand side there, Climate Score Global is that 90-meter grid resolution, typically used for portfolio management, enterprise risk, pricing, underwriting, credit risk as well as shareholder investor reporting. So we do that across the 8 perils, so everything from flood to cold. And then moving over to the right, you have Climate Score Planning, which is that 3-meter resolution. Typically for your more larger scale critical assets, multi-million-dollar investments, understanding how to fortify or resilify a particular investment. And we do that across the 4 perils. And the reason for that is because if you have flood at a 90-meter resolution, you're going to have flood at a 3-meter resolution. So there's no need to drop down to that level of granularity. As we're sort of learning earlier as well, during the, I think it was Oak North meeting, we have 3 different climate scenarios, an upside, a baseline and a downside scenario, which is a combination of the shared socio-economic pathways and the representative concentration pathways. So your more advanced IPCC scenarios as well. So you have the Paris Agreement, what the IPCC has said is the more current trajectory in the middle there, the 4.5, and the downside scenario, the hothouse world scenario that we're all trying to avoid. We also forecast that, as I mentioned, out to 2100, and we do that 5-year intervals. So I just wanted to touch on a few of our perils, and then I'll be going into some of the more outputs and a representation of our data itself. So we have a mix of acute and chronic perils. First 3 are your more classic acute. Wind and flood is where people tend to start on the acute side as well. And then convection storms can be a bit of an argument in the scientific community, whether that's acute or chronic. But on the acute, we have return periods from only from 1 in 10-year event all the way up to a 1 in 500-year event. And we produce the medium of the bell distribution as well as the 95th and 5th percentile as well. So you can really see those low impact, low frequency, but high impact events such as a hurricane, where you'll see a lot more of the interesting stuff, for lack of a better word, happen to a portfolio, because that's when you're going to see the real damage and loss occur. On the more chronic side, as you can see along the bottom, everything from heat, cold, wildfire, and drought. We tend to work more on a threshold basis. So we could see, for example, on heat, we can isolate a risk bucket of 30 days of a year past 35 degrees. And we can also done some quite recent metrics, where it's heat to cold waves, so 3 consecutive days, where an asset has been above that level. It's been very critical for the sort of gas and utilities portfolios, because a lot of our assets have been designed to actually cool down in a 24-hour period. So moving on, unfortunately I can't do an actual demonstration due to some IT issues where I can't get my laptop to share the screen. But I have screenshotted some of our slides here just to give you a flavour of what it looks like, but we have a demo out there if anyone would like to come see. So just starting at the power of having an actual portfolio level analysis. So what we've taken here is a utility portfolio of 15,000 assets globally from the International Energy Agency, and included 6 of our perils along the centre there. I've used 6 because it's a little bit cleaner than how you actually see it, and assigned various risk buckets to it. So you can see in the heat side there, we have a top risk bucket, which is 30 days of a year, but that's completely customizable where it exceeds 35 degrees. You can see that it's currently at 4,000, but what you would see, and will see if you come to our booth, is if I move it across to 2050, that heat bucket, high risk bucket actually goes from 4,000 to 6,500 within that particular peril. And you can toggle across the various different climate scenarios, the 3 that I mentioned earlier, at 5-year intervals all the way to 2050. And we also work with our clients to embed various metadata and attribute data, so you can see the different types of companies or ownership and do an aggregation on a country level or company level. So there's really an infinite ways that we can work with our clients to embed this into their platform if they would like to see it as a representation like this rather than just the raw data. So dropping down now to an actual asset level, so rather than the portfolio level screening. So we got here a 200-year flood event, so you can see at the Sabine plant, the 4 different return periods going along a decade at a time, that we'll see an increase of flood depth from 1.9 degrees all the way up to 2.4 degrees, or nearly a 30% increase for that particular plant within the next 30 years. So if I drill down a little bit more into that particular plant, so as I mentioned earlier, we have that 90 by 90 meter grid cell with over 7,000 metrics. So in this particular view, we have a scenario of the hothouse world scenario, but you can essentially pull in all those different metrics into this view to customize it however you would like to see it. On this one, we can confirm I need to stop talking now, apparently. But we can do it at a single location, and we can also do financial modelling for flood and wind, heat and cold coming out later on this year. But happy to discuss more if you come to our booth. But pleasure speaking with you all, and thank you for your time.
Hello, my name is Christopher, and I'm here with my colleague Eric. We are representing the Position Green group. It's basically the powerhouse of ESG within the Nordics, which consists of a couple of different branches. So we combine a market-leading ESG reporting platform together with a specialized ESG advisory, together with also academy function, so you can add ESG courses, etc., to your full setup, as well as assurance. And this is really to give a one-stop shop solution, basically, so you have all the services you need for your ESG reporting in one place and from one vendor. So we will be starting, of course, to focus on the platform, where we're going to be showing a short preview how it looks like and a couple of the main capabilities and functions. So let's go ahead into that.
All right, so as you all can imagine, it's kind of hard to narrow this one down and to give the platform just a 5 in only 5 minutes, but I hope you got some insights from this video. And basically, I want to give you an idea of how this works in general. So this is an illustration to show you how the data flows in and out of the platform works. So I want to talk a bit about the circle in the middle, representing the platform and what we do at the Position Green platform. So we help our customers to streamline their ESG reporting so that they can easily access a full overview of their ESG data, and also provide them traceability on that data being reported or being calculated within the platform, as you saw in one of the examples. So it's a full transparency, so you can make sure that all these data points and data reporting structures are, when presented, you can feel quality assured, that the data is quality assured and that you rely on that data. And the platform is very flexible and scalable, so we can truly make it fit to our unique customers' need as well. Beside that, we also have built-in knowledge, so you can actually, with a very fast plug-and-play solution, work with different frameworks to follow up on standards and disclosures within the platform as well. And we also have a analytics tool, as you saw some suggestions on during the video, where we can build dashboards that are unique for your organization. So we provide you with dashboards and KPIs, so you could easily track your ESG data in a good way. And of course, to set targets, like science-based targets, for example, and to provide you with assessment methods on your investments and assets, pretty much. So thank you all for listening to us. This were quick 5 minutes, and yeah, thank you all.
This is very, very quick. So my name is James. I work for Oxford Risk, and essentially sort of what, I guess our fundamental truth driving our solution is that if you want somebody to do something, you're better off asking them what they want to do rather than telling them what they should do. So essentially what we do is we ask investors about their ESG preferences. Now, we've been doing this for 5 years. I think you may have seen Greg speak. He's collected obviously a lot of data across the world in terms of what these preferences are. What I'd like to do with you today is tell you what kind of questions we ask. So how much ESG does an investor want or an individual want? Where do they want to invest? So ESG is obviously a massive area. Where are their preferences and how can we bring those out? And then the last one is, and this is slightly unfashionable, but there are trade-offs in ESG investing. Those trade-offs aren't just returns, but they could also be liquidity, they could be risk. We actually use this a lot in terms of cash deployment. There are people who won't invest for returns, but they will invest if they think you're aligning to their social values. So over the next, hopefully, 4 minutes, I'll show you the demo of our tool. So we start off by asking 6 questions. And these 6 questions are all written in incredibly simple language. We spend a lot of time trying to make things simple. It's much harder than complicated. And we're trying to find out how much ESG does this person want? To what extent are they nervous about ESG investing? And where do they have needs to sort of evidence? What we then play back both to the investor but also to the bank is how do you score against these traits? That allows us to do a very quick take in terms of how much ESG do they want in their investments. That's kind of a blended score between the questions that I just asked. And then the next level from that is providing some sort of behavioral nudges. What actions would we recommend for this individual? What actions would we recommend for an advisor of this individual, be it digital or be it in person? So that's the first module. The second module we then go into is a little bit more detail. So what particularly in ESG is this individual interested in? We start off by asking, are you willing to make trade-offs? Are you willing to put some investment aside? Are you willing to take on greater risk? So that's point one, sort of the deeper dive. The second part we start driving into is, in the E versus the S versus the G, where are you? What are your preferences? What are you most interested in? And you can see here, we also go into, and you'll see quite quickly, I think, hopefully, sort of environment versus climate. The reason why we split those out is to do the EU taxonomy to make sure that we can sort of get ourselves more closely aligned to that piece there. It is all incredibly simple. And sometimes I'm a little bit embarrassed that we should have more like charts and data flying around, but we're trying to make it so simple that somebody who doesn't know anything about ESG or hasn't thought about it yet is able to fill these out. This then lets us say, these are how your preferences break down against the different areas, and this is how much ESG you want to include in your investments. In this particular case, you may have noticed that they weren't willing to make any trade-off. So they're willing for light ESG, but they're not willing to go into the deep ESG. And then we refine the actions according to what they have, the additional information we have collected. We make this modular because every bank has a different approach. Every investor has a different approach. So this can be tailored. Now we're going into where in ESG do your passions lie? So this is me filling it out yesterday morning along the lines of somebody who's very interested in the social areas of ESG. We use the UN SDGs as the first taxonomy. We can use other taxonomies. We're not married to that. But that enables us to say, well, actually, in this investor, ESG is so broad. If you really want to engage with them, talk about the social side. And so they can go through, they can sort this out for themselves. We make them make choices. You can't say, I love everything. You have to choose what you love and what you love more than the other things. That's not to say that they don't think good health and well-being is not important. We all think it's important, but what is their passion? What excites them? What is going to make them a sticky client? We have 26 seconds for this to finish, so hopefully this is going to happen. I seem to remember I did time it well. So there you go, and then I decided to make some choices so you can move it around. And then the next thing that you will see is that when you have this, you can then choose which you care about. So this particular person decided to put quality education as their #1 topic. I'm going to cut short, just so what we're trying to do is just help you make informed choices, make sure that you can link to more transactions, meet regulatory requirements, and let investors differentiate their offering. Thank you so much.
I have no idea how it starts. Just like, right.
Just to the side, to the right.
Hi, so everyone. So my name is Sarah Neville. I'm Senior Associate and Legal Advisor at Zeidler Group. So Zeidler Group is, it's not working. Oh, yeah. Zeidler Group is originally a law firm. We're geo-neutral, so we have location all across Europe, and we're working in an integrated manner so the client don't notice it. We're also technology-driven, so over the years we've developed a number of solutions to streamline really all our client processes. And as part of the move to sustainable finance, we've also developed a number of solutions that we hope to offer our client and help them with. No. Why is it not working? I don't know how that works.
One more time back. Go back again.
Or back.
Yeah, now. One more time to play video.
Of course it had to be me. It's a video normally.
It's playing now, so let it run.
So, yeah, just to be a bit of information. So you have offices obviously here in London, but also all across Europe, as I mentioned, opening also in the States and in Australia, so that we can give the client the best coverage possible, especially with a tech solution that usually requires, I won't say constant, but very common attention. Still not going. Here you go. So all our solutions are presented in the Swift module, and in the Swift platform, where you have the different modules accessible. You can subscribe to one or more modules. And usually the teams working on each of the modules really work close together so that you don't have to repeat yourself to the different member of the team. The first one that we provide for sustainable finance is the Global Knowledge Hub. So it's really a database that provides legal content 24/7, legal advice to explain to you EU requirement, national requirement, but also we're expanding now soon to the UK with regard to sustainable finance. It's all written in a plain English, easily understandable. Second is SFDR disclosure tool. So this is a dynamic form that will help you to do without any effort your pre-contracted but also periodic disclosure that will soon become a requirement in the SFDR. But the one I want to present today is the enhancement of our EMT EPT tool to create, validate, and disseminate EET. So this is the platform you would arrive as our client, and you would see all your product per share classes with also your ISIN and the SFDR product type that you are set, understandable, readable for you as well. And we included all the type of reporting that you have to do, all the type of information which are required, screening criteria according to your investment strategy, but also some country-specific information, for example, for information that are required for France or specific information required for Germany. For each of them, you can review the data and then comment, either comment internally or else create a comment that will be sent on to us, and so that we can review, amend, and correct accordingly, and that would automatically change the status on the main page. Once you are generally satisfied with all the content there, you can go through the approval process. As we said, this is a validation tool. You can create different approval stage by different department, different providers, and you can also order them by order of importance, so that, for example, the legal department review last your EET. In the same manner, you can, again, comment either for you, for your colleague, your department, or for us, and send it directly to us for a general check. Once it is approved, it will automatically change. Can I finish then? Thank you. It will automatically change the status on the main page. You also have an audit trail so that you can see which individual in that department actually approved the document and at what date, and if they made any comment. Finally, once it's all ready, you can download it either as an Excel, and this is the von Daten format, or as a CSV for WM Daten. Then you can disseminate the document by creating different dissemination rules. This is entirely customizable for you. You can name the rule, you can create it by type of product, by type of identifier, and by type of SFDR product as well. And then you can add as many recipients as you want. We have a number there, but you can add as many as you wish. And then finally, once it's all disseminated, you can download a report about the dissemination, when it was last disseminated, to which recipient, and all that information. It's here written for EPT, but the same thing is available for EET records as well. So this is in a nutshell our EET solution, validation dissemination tool, as I mentioned. If you have any more questions about this solution or other, please feel free to reach to me. Thank you.
Hi everyone. I'm Miroslav. I'm a head of innovation and co-founder of Forshare. Happy to be here and to present you what we do around ESG. We are a Paris-based RegTech company, and over the past 10 years, we've been delivering solutions to financial companies to help them meet their regulatory requirements. And as you know, these requirements, they're increasing in complexity because of the data and also in cost because of the time of implementation and delivery. So what's new into 2022 about us? There are two initiatives I would like to talk to you today. First one is a project led by our data science team specialized in semantic analysis and natural language processing. And there is a conference, international conference in AI that we are co-organizing around ESG taxonomies and data extraction. So we'll share that with you today. And also, secondly, there is a new platform we have launched to automate compliance requirements around ESG. There we are able to automate end-to-end SFDR compliance and reporting. So let's go for this presentation. What are our products? So in 3 points, first of all, we're working on semantic analysis services that are able to extract information from documents. So it could be fund investment documents, annual reports, sustainable reports, and then classify that information and put it into a structured format. The second point is all the data aggregation capabilities, where we're able, in a Zapier mode, create financial connectors to amalgamate all the data required for performing scoring and then provide it to the end users. And we deliver that through a full cloud, no-code platform that is ready to use and fast to deliver these solutions to our clients. Here is our initiative about ESG taxonomy. So in this conference, which will be organized on July 24th, there are participants from all over the world, different companies, as you can see. So their data science teams are working in a competition mode around 2 tasks that are prepared by our research lab. The first one is an AI-enriched taxonomy. This means that at Forscher, we have created a taxonomy based on some existing ones, like the ESG taxonomy regulation, but also some other taxonomies in various countries. We have proposed this to the participants to train models on this based on sustainable reports and enrich automatically this taxonomy. In the end, we don't know in advance what the result will be. As you can see, there are, for example, some terms that we can discover in documents, like waste management, that could be described as hazardous waste, waste reduction initiatives. And so this will create an augmented taxonomy based on the machine learning techniques applied in this first workshop. Then the second workshop is around automatic classification of sustainable narratives. So based on the augmented taxonomy, we will be able to classify a narrative as being sustainable and not sustainable and map this through the augmented taxonomy from the first workshop. We will be communicating on the results of that. Our data science team is also building a model, and there will be a scoring of the results. So stay tuned and check also our website for this. And so we are very happy to co-organize this with the International Joint Conference on AI. Now, second point is around our business application platform, where we have delivered recently a use case for one of our customers in a record time. So as you can see, this is an end-to-end process for data aggregation, ESG scoring, and reporting generation. We have delivered within 16 weeks, thanks to our platform. So we deliver this to asset servicers, to asset managers, private equity funds, and beyond ESG, we enable processes like investor onboarding, portfolio monitoring, day-to-day monitoring as well. Is that fine? Yeah, so if you're interested to see more about our platform, you're welcome to see us here, and we'll be happy to share more with you. Thank you.
So it's just, I go the wrong way?
Yeah, the other way. Yeah.
Oh, perfect. Hi everyone. I'm Rob Maddage. I'm the CEO and founder of PureFacts Financial Solutions. Super happy to be here in London. First time back since COVID. And I've been told I'm a wee bit competitive, so I'm going to try to beat this red light and see if I can do that. I wanted to just say to everybody in the room, those have been amazing presentations, amazing technology so far. And I'm really excited to be here, see all of these people excited about changing the world. And I really feel in financial services, we have a huge opportunity to have a huge impact to make the world a better place. And the way that's going to happen is we're going to change the world so that the cost of capital to firms that are doing the best things is going to be the lowest. The cost of capital of firms that are not doing the best things is going to go up. And this is going to have a huge impact on the bottom line. Just quickly, a story about my kids. I love being a dad. I've got 3 kids, 2 young girls, and we were out walking one day. At the time, the girls were 19 and 16, and I've been running investment accounts with them since they were very young. And they said to me, Dad, I want to sell our shares in this large Canadian bank that we've been invested in for a while. And I said, girls, why? We've had great performance, great dividends. We're in the DRIP program. Why do you want to do that? And they said they were doing some research. This bank was the biggest investor in the Alberta oil sands. So we did make the switch for them. And so I know this is coming because the kids are smarter than me, and they taught me about this. Just a very quick background about PureFax. We are a global company headquartered in Toronto. You probably picked up the funny accent, So we're headquartered in Toronto, Canada. We do have offices in Zurich and Lisbon, and we do have some boots on the ground here in London as well. We've really grown, and our focus is on enterprise software in 2 main areas, which is revenue management, fee billing, and reporting, client reporting, AUM reporting, and the likes. We did win a few awards. I skipped over, but we did win a few awards thanks to Marion and the group here. We're part of the WellTech 100 and the AI FinTech 100. Probably nothing speaks louder than the list of our clients, a veritable who's who of financial firms. So very proud of the firms that we work with. What we do really is around data aggregation, collecting the data. We have math experts, data experts, AI, machine learning people. And what we do is we make sure that the data is consistent across the organization, detecting anomalies in the data and making sure you have the best data to do your reporting. And we are really strong, as I said, in 2 areas, revenue management and client and asset management and asset under management reporting. Just threw up a couple of examples of reports here to give you a flavor that, the reports look pretty good. We do help our clients white label and customize these reports to look any way they want. And we take all of this data from all of their organization, put it together. And on the fee and revenue management side, we have a couple of ideas for ESG. I did get to see Greg's talk this morning. I was really excited when he said 70% of people will stick with it. One of the things that we're doing with our clients is saying, hey, to get your people, your client investors to move onto your ESG offerings, would you consider offering them a discount, maybe 5%, maybe 10%, maybe a 15% discount on their fees? Our software allows them to do that. This is another portfolio report where we just break it down a little more. And that's it. Thank you. I beat it by 1:18 seconds.
Hi there, bad start for me. Sorry about tripping on your foot. My name is Vladimir. I'm here to chat with you about responsible investing. And you've already seen this slide. Actually, Richard beat me to it, and he's probably done a better job introducing the concepts and the topics than I would. The panelists also covered it. So I guess what I'm going to do is I'm just going to say that ESG is hard. It's hard to figure out. It's challenging to implement responsible investment as part of your strategy. So that's what I'm here to talk about. Here to talk about the average asset manager, what they do in their day-to-day job, and how they're trying to implement a solution that isn't necessarily working. So what are they doing day to day? Today, the most common approach is to find ratings from various providers, aggregate them into an average quantifiable metric that is more useful, because there is some disagreement amongst the various providers in terms of who is whom and who is doing how well. Then they review the high-level reports that come with the ratings, and then they do subsequent manual research to vet all the information that they've produced and procured. So this is a time-consuming process that kind of distracts them from their main responsibility, which is finding good investment ideas. And to add to the challenge, the centralized ratings providers use their own methodology to produce the ratings. So what that leads into is a lack of personalization to reflect a specific investment team's philosophy as well as the values of the clients that they serve. So it is our belief and our mission to try and give the asset management professional the tools they need to be able to formulate their own opinion about ESG risks, opportunities, and try and assign some value to the externalities that they manage. In this platform, they should be able to access all news, social media, company ESG disclosures, 10Ks, basically everything that they can read manually. We want to be able to aggregate it, provide them a high-level theme overview of what's going on the macro scale within the sector, within that specific portfolio position, and also give them access to the underlying granular data so they can verify exactly what went into that theme specifically. That's the product that we've built. It speeds up the ESG research for the fundamental professional to be able to truly integrate ESG as part of their strategy. So as they're doing evaluation on a portfolio position, maybe they're evaluating a new trade, maybe a new RFP came in from an institutional allocator, they are able to quickly parse through all ESG relevant information. They are able to understand it, access the granular underlying theme, extract actionable insights from the portfolio management, as well as be able to compare various companies amongst themselves. All the while, the reporting is automated. So it truly allows them to create a defensible strategy when it comes to ESG investment. And it allows them to truly reflect their personal values, the investment team's values, as well as the values of the clients that they serve. So that's the product that we're piloting in North America with some of the top asset management firms as well as some of the pensions. If you are interested, please pull up your phone. My contact page will pop up. Drop me a note. We're looking to expand our early adopter user base to 5 European companies. Please give me a shout. For the VCs in the room, if anyone's there. In fall, we are ramping up for our seed round. If you're interested in participating, there's probably room for one company to be able to join our seed round. Thank you very much, and have a wonderful day.
Hi everyone, my name is Amandine Leroy. I'm delighted to be with you today, and I'm delighted to introduce you to Manaus. So Manaus is a 100% subsidiary of BNP Paribas. We were founded in 2019, and we like to say that we're not a fintech, but not a subsidiary of a large group. We tend to get the best of both worlds because we operate on a fully different technological stack. However, we are fully also audited by BNP Paribas. So we're a fintech at banking security standards. So we were founded 3 years ago, and we're now a team of around 30 persons. We got a 10 million funding to do two sorts of activities. We have two pillars in our activity. The first thing is we help institutional investors, asset owners, or asset managers who invest in funds or funds look through their portfolios. Before you can do any type of analysis, deep analysis on your portfolios, you need to know where your money has been invested. And so for that, if you're working with asset managers, you need to ask those asset managers what they are doing with your investments. And so we have a different approach from the market data vendors who are collecting public information and redistributing this information. We have built a module that helps an investor retrieve the inventories from their asset managers in full confidentiality, in full security. So it's like a social networks where you invite your asset managers and ask them, can you share with me the inventories of the funds where I am invested regularly, so that I get at the end I will be able to get the full breakdowns of my investments. That's the first step, and that's the first pain point that we're trying to solve for our clients. Once we've aggregated and looked through the data, they can access an open architecture marketplace of ESG data providers and services. That means that it's like an app store where you can find all sorts of services that are plugged on your portfolio. We've done the plumbing, we've done the selection of the partners, and that gives you, as an investor, the opportunity to select the experts that you want to work with. So if you already have a license with a large agency, you can bring it onto Manaus, but you're also allowed to subscribe to all sorts of apps that can do different types of things for you. So we have apps that help you assess your portfolio. That means that provides you with portfolio level ESG reporting. So you choose the partner you want to work with. We prepare the portfolio, and the app is running onto your portfolio according to the methodology of the partner that you have chosen. If you're not interested, if you have your own methodology to aggregate, you have your own materiality table, you have your own weights in your ESG scoring, you can also ask Manaus to only enrich your portfolios, and you'll do the rest. So we have two types of apps on our marketplace: the apps that will do the whole ESG reporting for you. We have apps that will also help on your regulatory reporting, PAI calculation, taxonomy alignment, biodiversity, ESG risk, ESG impact, climate analysis. Or we can only, and I say only, but it's already quite difficult, enrich your portfolio with the right data points that you need for you to run your own analysis. And so there is a marketplace, and we also provide you with different types of services that we operate ourselves. We have a portfolio coverage estimation app that allows you, previous to any engagement with the providers, assess what is the coverage of those providers on your portfolios, not on a universe, on your real portfolios. We have a data extractor app that will help you extract exactly the data points that you need for your reporting tool. And we also have an EET generator app that will help you be compliant with your obligations for the end of the year on your EET. So we're a marketplace. We do look-through and ESG marketplace, and we also have proprietary services that can help you roll out perfectly your ESG strategy. Thank you very much.
Good afternoon, everyone. Karina Vaughan from GHG SAT. So GHG SAT is the first and the only company in the world to take high-resolution measurements of greenhouse gas emissions from its own commercial satellites, all named after our team members' children. Since the launch of our demonstrator satellite in 2016, we have launched a further 5 satellites, with 5 more scheduled for next year, all measuring methane emissions from industrial sectors. Why methane? Well, CO2 represents most of the emissions in the atmosphere. Methane has more than 80 times the warming power of CO2 over the first 20 years after it reaches the atmosphere. So whilst methane is fugitive and harder to find, once found, there are a lot of known technologies that can fix methane emissions. So by doing this, we make real environmental impact, and we provide a clear path for the financial sector to rapidly affect the carbon footprint of portfolio holdings. So for decades now, satellites from NASA and the European Space Agency have measured emissions across the planet every day. They provide a big picture view, but they're not really designed to go and find individual sources. And that's why we developed our technology. So we use a patented spectrometer that detects in millions of pixels at a time, looking for concentrations of methane that are above the average background. So each pixel is 25 meters by 25 meters compared to the 5 by 7 kilometers of the European Space Agency. We provide us a leak detection threshold of 100 kilograms per hour compared to 3,000 kilograms per hour for the ESA satellite. So GHGSat is therefore the only company to combine unique high-resolution satellite data with the big picture data of public satellites. And our data is enriched with data from Sentinel-2, Tripomi, and later this year from Landsat. And where a public satellite identifies an anomaly, we can take a closer look, often saving companies' reputations and share price from the impact of the sometimes erroneous interpretation of public satellite data by other data providers. And this year, we'll add high-quality third-party CO2 data, and then data from our own CO2 satellites and from public CO2 satellites, providing a single source of reliable, consistent, worldwide satellite emissions data. And we own the IP for the sensor and for the software and the algorithms that we use to interpret the data. And then we combine it with third-party sources of information to look for patterns and changes in emissions around the world. And as emissions are increasingly becoming an important metric for company performance, with correlations being made between emissions, profitability, and stock market value, we commissioned some research last year into institutional investors' allocations. And number one priority, you won't be surprised to hear, was emissions reduction in portfolio holdings, with climate policies that proposed actions to vote against company chairs in high-emitting sectors where there is no evidence of a positive direction of travel. But of course, that requires investor-grade data. And so GHGSat offers a revolutionary new data product for the financial sector, company-level emissions data updated monthly for investors, managers, lenders, and insurers of industrial sectors. From this month, the US methane emissions of top oil and gas companies, and by the end of this year, worldwide methane emissions of all oil and gas companies, then next year, worldwide CO2 emissions of other high-emitting sectors. And this is based on direct measurement with more than 18 months of data for back testing. And as the environmental pillar becomes increasingly dominant, GHGSat's emissions data provides unique insights for portfolio performance and risk management, including early alerts to an increase or a decline in production, the ability to track companies and sectoral performance against decarbonization trajectories, and detailed knowledge of worldwide company emissions before market disclosures, helping financial decision makers to manage environmental, financial, regulatory, and governance risks. Thank you, and please come and visit us at our stand today.
Hi everyone, good afternoon. My name's Alan Blanchard. I'm from Apex. I think we're nearly there, so thanks for sticking around. I'm going to spend the next 5 minutes explaining how we're working on an embedded ESG compliance. So I look after partnerships and alliances at Apex. We've been working with a lot of, obviously, technology and solutions providers, and we looked at how we might be able to tackle the ESG challenge. And here we're combining technologies from Alveo and Cognizant along with ourselves. And what we're going to try and do is achieve automated compliance for ESG, particularly in hugely complex scenarios like cross-border, cross-fund types, things like that. So we do this by having the content in the right place. So we don't do machine reading regulations and sort of trying to work out how it works. We work with proper law firms and advisory firms to make sure we have the correct legal advice in place. And And we can apply these rules across any jurisdiction, as I say, across any activity, and it's highly scalable. As you, as the sort of end user, as you move into different areas and different scenarios, we can scale the solution across all of that. So how does it work? So we've got sort of Cognizant technology in this scenario. Obviously, you can swap out these technologies for whatever you like. It's highly interoperable. We're all API-based these days. So we have Cognizant with the underlying technologies, the trading platform, and the product distribution. Then we have Alveo as a product data supplier, and they have, obviously in this case, the ESG scores that we're interested in. Those product data can then be assessed against APX's digital rules. So we've taken regulatory rules, controls, policies, whatever. It's up to the client kind of where they set the thresholds. But this product data can be run against that to say, we think this, well, we know, we don't think, we know this product is in compliance with the ESG rules that we've either taken directly from the primary legislation or that we've added our policies to, our risk appetite to. Then your asset manager, your relationship advisor, whatever, can place that order knowing that they're compliant in real time. So let me show you the kind of data that we're interested in. So this is obviously in the Alveo platform. Now, Marion was going to kill me if I sent him too many more videos. So this one doesn't quite have the bit where it makes the call out to APX and comes back with the yes or no. So you'll forgive me. But it gives you the idea of the kind of detail that we're talking about here. So scores across a wide variety of different data attributes, all fed in, as I say, from these trusted sources. So the kind of data is reliable. And this is sort of like the portfolio manager's point of view, right? So this is me trying to figure out what's going on. We can see we can cope with the volatility as the scores change in real time. You can always query that against our rule sets to say we're still okay, we're not okay. So you can do bulk batch sort of data queries as well if you want to say kind of what's our risk assessment. We have the rules from all around the world, so we don't mind kind of what jurisdiction you're in. Obviously, the more gnarly, the better as far as APX is concerned, because we don't want everything set to straightforward green. That's no fun for us. And then you can go down into the client level. So here we're going to go into JP Morgan, and in the Alveo bench, you're going to see the kind of ESG traffic lights there for how good or not it is, according to the data that you've got in there. And then in that left-hand menu there, you can run, what I would like to show you, and I could show you if you follow up with me afterwards, is how you run a query out to the APX rule sets and say, tell me now, right now, as of today, is that compliant or not? Obviously, if it's not compliant, you know in real time. If it is compliant, you carry on knowing you've reduced your risk, hopefully, as close to zero as possible. And this is what we're hoping to achieve with embedded compliance. Thank you.
So am I the one keeping everyone from their lunch? I'll try and keep it brief. So I'm Avi, I'm the co-founder, and she's not a natural disaster because there's no such thing as a natural disaster. There's only natural hazards that are badly managed. And what we do is we help organisations predict and prevent flood impacts. So particularly in the UK, one of the largest flood risks is surface water. And surface water, unlike rivers or the sea, can pretty much happen anywhere. It happens across street corners, it can happen down the street from here. And it affects 1 in 5 homes. And the impact's also rising rapidly, and they're also being driven by things like convective storms, which London in particular was badly hit by a number of convective storms last summer, which caused a lot of widespread damage. And these events catch people off guard. They often cause impacts that would normally be able to be protected, and often the impacts are not covered by insurance either. And so why I said natural disasters don't exist and we should try and stop using the word natural disaster is because while floods will occur, actually there's a lot of steps we can do to mitigate the risk. So there's 4 key steps, I'd say. Firstly, understand your risk, looking at the risk and engineering reports, or again, in the UK, we've got risk maps from the Environment Agency. You can then invest in resilience measures like flood defences or non-return valves. You can then set up your own flood action plan. So this is where, at least as a household, you can move TVs, your car, etc. to higher ground, protect vulnerable kind of relatives. As an organisation, most organisations will have, as part of their business continuity plan, several activities that they need to take when they're expecting flood. But the final piece that ties this all together is early warnings, and that's really our focus. So a little bit about us. We're a spin out from Loughborough University, so I'm a former academic there, where for the last 20 years, a team of academics, led by my former PhD supervisor, developed a new flood forecasting technology. And we did this in partnership with the Environment Agency and the Met Office, where we developed a warning system that complemented the existing government warnings. So right now, many governments across the globe do provide river warnings, but not surface water, even though surface water is the largest flood risk. So we provided a system that complements it with a live flood forecasting solution. We've started expanding this across the UK now globally, and we are working with over 100 different organisations. So our technology works through something called live hydrodynamic modelling. So we take models and run continuous simulations across the landscape, modelling where the water is going to land, where it's going to build up, and we take a lot of data and underpin this, and we run this at the property level. So what this does is provides across the whole country depth time predictions whenever we're expecting a flood. And this then provides actionable information for people who receive these warnings to be able to mitigate the risk. And these, again, capture surface water, small rivers, the sorts of events that would normally be not covered by the government and be catching people off guard. And so what we provide is a toolkit to our customers. So they've got email notifications when they're at risk, and these link to our dashboard, which I kind of showed you very briefly in that last slide. We also then have our data all available as an API for other organizations to be able to integrate into their systems, and there's apps on the way. We also then, for particularly high-risk assets or vulnerable communities, we provide on-site sensors. So we have quite a few sensors on site across flood action groups in the UK and also manufacturing sites. So how does this relate to fintech and kind of the wider insurance industry? Well, one of our major partnerships, we work with a number of insurers to warn and support their customers. So for example, in a large corporate like BT, it was funded by Zurich. Zurich provided a service to help them respond to unique events, set up flood defences before the flood occurred, move stock, and pump water out of key sites. And this is particularly important because getting on site faster when there's a flood makes a whole world of difference. And based on that work is now expanding, so we've got a far wider range of organisations using the service. And an example of more recently, Liberty, over the last couple of years, we've been working with them, supporting all of their UK customers, construction, retail, property, and expanding it now into the US. And this helps customers have a reduced risk, improves what the insurer provides their customers, and kind of enables them to be able to actually providing a wide range of services. And in particularly with kind of a lot of banks here, I think one thing that we're really interested in is actually how we can expand this beyond just insurance into more of a banking offering. So really happy to continue the conversation over lunch. Thank you.
Thanks very much. Thanks to all the presenting companies for their insightful presentations. Hopefully you've had enough. If you're still hungry for some more ESG content, you can join in the main stage. I think there are 10 to 15 minutes still to go there. But if you're hungry for food, it's served in the networking area. So I'll see you here after the break. Pleasure to meet you.
Pleasure to meet you. Oh yeah, okay, yeah, exactly. So I realise you've taken a little bit of a different approach because I asked this video. Just playing a video.
Okay, I mean it's still useful to just introduce yourself on the stage.
Yes.
So
Yeah.
if they have any questions, just reach out to
I
me.
could have done,
The networking break.
I could have done the slides myself, but I think it's a bit late to change it, so I'll just play it.
If you have slides ready, we can replace it. Yes, so if you've logged into the Brella platform, they'll be available to view there on demand for 30 days. Yeah. Right, welcome back everyone. It's 1:45, so it's time to kick off the next demo session. Hopefully you enjoyed a nice and productive lunch break. We'll pick up where we left off with the quick-fire 5-minute demonstrations. Just to remind everyone that missed out the morning session, we will ask each presenter to come on stage as soon as the previous one is finished to just make sure we go as quick as possible. And also, please try to stick to your allotted time just to give equal opportunity to everyone. With that being said, the boring stuff is out of the way, so I'll pass off to Gordon from Gaia Lens to take us away. Thank you.
So it should just be 2 clicks.
Yes.
Okay. Hello everyone. I hope that you're all enjoying the summit. My name is Gordon. I'm one of the co-founders of Gaia Lens. Gaia Lens is an AI-driven analytics, ESG analytics platform. And at Gaia Lens, we take a purely quantitative approach to ESG and offer a suite of tools to make investors' lives easier when it comes to ESG investing. Our platform is comprised of 3 main dashboards. Firstly, a portfolio-level dashboard where investors can upload a portfolio in seconds and start comparing its ESG performance against a chosen benchmark. Portfolios can then be easily updated going forwards. It also flags any... Just wait for it to go down. It also flags any ESG news incidents that are taking place concerning their portfolio companies. The portfolio dashboard is suitable for asset owners as well as asset managers by allowing the asset owners to monitor their many different portfolios at the same time. Secondly, we have a screening tool that helps investors with portfolio construction by enabling them to choose their universe and screen on traditional valuation metrics and ESG factors. Finally, we have a stock-level dashboard for deep dive research into a company's ESG profile. And today I wanted to show you some highlights from this stock-level dashboard. In terms of our coverage, we cover over 17,000 publicly listed companies. 70% of those are small cap and over 30% are emerging markets. We track over 500 ESG factors and use around 200 to calculate our ESG scores. Our solution aims to address some of the existing criticisms of ESG ratings, such as their lack of explainability and their subjectivity. I wanted to talk through with you two key aspects of our system today. Firstly is explainability, and secondly is customizability. We've got Tesla up on the screen, which is always an interesting one to demo. You can see that we give Tesla a score of 48 out of 100, where 100 is the best and 0 is the worst. And this is just above the industry median of 45. To illustrate the explainability of our scores, let's dive into the social pillar. Our scores have 4 levels. We have an overall score, which you saw on the previous page, of 48. We have pillar level scores, theme level scores, and feature level scores. Looking at the theme level scores, we can see that the customer's theme is bringing down Tesla's social pillar score. You can then zone in on the customer's features to see what's going on at the most granular level. These scores are percentile scores, but you can see the raw values of the features in the tooltips. The second key aspect I wanted to show you all today is the customizability of our platform, and this comes in 2 main forms. Firstly, investors can create bespoke ESG scores by adjusting our building blocks in order to reflect their worldview. So, for example, you can change the pillar materiality weights and recalculate the scores. Secondly, investors can create bespoke thematic screens which track any themes that are important to them. Here we've mocked up modern slavery, diversity, and business ethics screens. These screens highlight the power of our system in bringing together structured and unstructured data. For each theme, the top table shows the structured data side, where we are benchmarking a company's performance against its peer group. The bottom table then shows the unstructured data in the form of news items, which are relevant to that theme. This brings us nicely onto our new system, which is the last thing that I wanted to show you. We have built a cutting-edge news system to process the news for all 17,000 companies in real time. This involves tracking hundreds of thousands of news sources, social media, and NGOs. We use NLP techniques to tag the news as being relevant to over 50 different ESG topics, including SASB themes, UN SDGs, and a few other important themes like modern slavery and gender equality. We have 2 news screens. One shows the latest news flow for the selected company going back 10 years. And the second news screen shows our ESG incidents output, which highlights any pressing issues that the company is facing in the news, and you can filter by ESG topic. The news, just like our scores, is refreshed daily across our whole coverage. And that brings us to the end of my demo today. Thank you very much for listening, and please don't hesitate to ask me any questions throughout the day. Thank you.
Hi all. I'm not sure how this works, so you're going to have to be patient with me. I've got a clicker here. So my name is Andrew Flynn. I represent Clarity AI. Many of you will have heard of us. Some may not yet. So we are a 5-year-old company. Doesn't sound like a lot. So the first 2 years were development. The next 3 years really were the go-to-market. In that time, we have since been funded by Deutsche Börse, BlackRock, and indeed SoftBank. We're growing pretty quickly. Now, we have a few pillars which have allowed us to do these things and grow as quickly as we can. Which are these? So fundamentally, we depend on technology, which I will go into in a short while. I've got a really cool video, which you're going to see shortly. The technology that we're using, which has allowed us to be scalable, allows us to have a significant universe of coverage. So we're talking about 30,000 companies at the moment, 222,000 funds, and 386 governments, both national and subnational. Fundamentally, we're customizable. So the data and the information can be sent to our clients via API or indeed via web app, which I'll show you in a sec. So this customizability is crucial, whether it's a small company perhaps with a nascent ESG journey or whether it's a large multinational. Indeed, some of you may have heard that SoftBank have recently chosen Clarity AI's data for their SFDR enterprise needs. So, and finally, our methodologies are built from the ground up and crucial to who we are. They're very, very transparent. They have to be. This is why our clients trust us. So this has empowered us to offer a range of different solutions. This is a snapshot, but effectively whether it's the impact of a portfolio on the world, standard risk, which is essential, climate, or indeed the topic of the day, which is regulation. We have solutions for all of those. So I'll jump in. I'm hoping this starts automatically. Clarity AI is a tech company. What this means is that while we've been able to grow very quickly because of it, we rely on technology to bring objective analysis week in, week out, rather than perhaps relying on human analysis, which may be subjective and indeed sometimes even fallible. The next item is data ingestion. We'll pull in a vast amount of data from a range of different sources. And crucially, instead of just presenting these data points to our clients as gospel, we'll run them through reliability algorithms to make sure they make sense and indeed are correct. And there are benefits to this. We can then paint very good pictures of industries as a whole, which in turn we can use
to fill in any gaps when it comes to a second company, which perhaps has not been as transparent with its reporting. The third is methodologies. This is one of the main reasons our clients trust us. Within every single one of the modules is a methodology document which can be downloaded and accessed by our clients. This provides full comfort over how the module works and what the thinking behind it was. Using these, Clarity AI is able to deliver a range of different solutions, whether it's ESG risk and exposures, whether you're talking about climate or indeed the impact of a portfolio on the world, we've got you covered. Something I'd like to focus on a little bit is regulatory modules, just because most of my conversations tend to revolve around these at the moment. Now, whether we're talking about MiFID II, TCFD or EET, which we also support, or indeed EU taxonomy and SFDR, which you can see here. I'll just quickly jump into the SFDR module, but crucially, these have been built from the ground up, adhering to regulatory guidelines, which means that an analyst can upload a portfolio, they can review the PI indicators here, but crucially they have a button here, which if they were to click it, downloads a Word document, it's a Word template, which has been pre-populated with the mandatory PIs. They would then add their optional PIs. Once that's done, they can use that same document to report their findings. So the question here for our clients was, did they really want a team of analysts doing this repeatedly every single quarter, or did they want to free up their time so that they could bring value elsewhere? My name is Andrew Flynn. I represent Clarity AI, and I'd be very keen to know how your firm is dealing with regulatory requirements. Thank you. That's nearly exactly 5 minutes. Thank you very much.
Hi. I didn't know that I'll be coming in on house that is expecting me. Sorry for if there was a certain delay. My name is Wamila. I'm the CEO and co-founder of Plan A. And I'll jump straight into it. We're a company that exists since 2017, more than 100 people. A quarter of them are climate data scientists and ESG and policy experts, which gives me kind of the possibility to be able to speak here with a certain level of knowledge. We have been working for the last 5 years on supporting corporates and financial institutions in particular on understanding how they can reduce their emissions and how they can do this against their targets, but also how they can improve their ESG performance. And what this means in the context of financial institutions is responding to these particular challenges. I'm sure that I'm not going to be telling you a lot of news here in terms of like what are the most often observed problems related to reduction and also ESG improvement, as well as tracking. But the first step is obviously education. This is something that we have embedded in our product. Is it possible that you don't record? I'm sorry. Thank you. What this means is essentially the product is embedded with embedded education within it. So for the stakeholders that you're managing and you have to engage into building trust with the process of scope 3 assessment and also like your investments, your whole portfolio on their ESG performance, this is something that is really key and is embedded into the way the product operates. Second is network dependencies. Like you can't assess your ESG if you don't also look at your portfolio of and how they're performing. So what this means is that we're able to connect accounts. We're able also to give you the possibility to zoom in on one particular company, but then see the overall performance of the whole portfolio. We also support on the data collection and the optimization around integrations, automation. We know that this is one of the biggest burdens that many financial institutions see. And the final bit is that we have a regulatory team that enables us to track and also enable alerts within the product so that you don't need to focus on all these different novelties that are coming up from the EU and also from the UK government, but you can actually focus on the work. So the product is certified. What this means is that the results that come out of it are auditable. That reduces the cost that you would need to pay for third parties for validation. We have official partnerships also with the company that has certified us. So that means that there's a way in which you can reduce your kind of, again, balance and resources associated to that. The product focuses on analyzing, tracking ESG performance, automatically we prescribe how a company and its portfolio can improve, and finally we support with the automation of the reporting. The analysis bit, and I'll kind of go swiftly through this, is focus on having the flexibility to allow you to have your own KPIs, because we know that some of you probably are looking into your own templates for ESG reporting alongside other templates that come out from the different regulatory frameworks. So we analyze all the KPIs that would be interesting for you. We have quite a big wealth and kind of depth of knowledge around the ones that are most prominent, but then we also enable you to kind of add your own if that's needed. What this means for the reporting bit is that you have your own templates, but then you can activate templates around TCFD, EU taxonomy, corporate sustainability reporting directive, something that is going to be very prominent for companies that have anything to do with the rest of Europe, and also a few others that I'm sure you're familiar with. Where it gets really important, and I think this is where the magic of our product comes in, is the fact that we have a deep understanding of the challenge that you face when you have to work with your portfolio companies. What the product allows is 3 different ways in which the data can be collected. First, you can connect accounts. So if your portfolio company or an investee has an account on our platform, they can be connected to the overall platform that you have, where you analyze your own data. There's survey-based data collection, which is where kind of there's a bit of a lower threshold for connection if the companies, for example, are kicking off their ESG journey at this particular point. And then finally, when data is missing, we're able to predict the missing values. Why is this important? Because there's going to be continuously data gaps, and we understand that there's a big issue with that. The product is modular, so this complex structure is something that you can expand on, you can kick off with. It's really up to you to decide how to structure it. And you can have fund level assessment, but then you can also have portfolio company level assessment. On the improvement bit, and this is where I get most excited, is the opportunity to go beyond the regulatory framework. We know that at the moment, the most important bit is having the possibility to report, but then we also have gone a step further and we give suggestions on how you and your portfolio can improve on the performance. I am going to finish on this, and I'm sorry that I'm taking extra time. This is not only a software, we have a customer success team that enables you to deal with the whole kind of complexity of organizing the portfolio, getting them to report, and then getting also all of your questions to be answered and covered. So I'll stop here. Thank you so much for the attention.
So hi everybody, my name is Maurice Gordon. I'm a Partnerships and Business Development Manager at RepRisk. RepRisk is an ESG data science company providing both qualitative and quantitative data for responsible business conduct and ESG risk assessments. Yes, okay. So we were founded in 1998, so I think we are officially maybe the oldest vendor here, back when I was a youth, as an ESG risk consultancy firm. And RepRisk has evolved into what is today a due diligence tool for the monitoring and management of ESG risk. Our solutions really help firms to identify, assess, monitor ESG risk in both business relationships, operations, investments, and enabling them to take action towards more responsible business behaviors. What we do is we provide an outside-in lens on ESG risk, intentionally excluding companies' self-reported data. I think we've all heard today a lot about that greenwashing aspect. And this really allows us to shed light on what companies are doing on the ground where they operate as reported by public stakeholders. So we are identifying ESG issues and incidents that have a material impact on a firm and its underlying investors' compliance risk, their reputational risk, and ultimately financial and investment risks. So RepRisk allows firms to conduct in-depth risk research and monitoring of companies, projects, sectors, and countries. With over 15 years history, our database covers over 200,000 different public and private entities, the majority of them being private. who have been involved in over 300,000 ESG risk assessments. Our coverage does extend to emerging and frontier markets, as well as over 50,000 different infrastructure projects. And we provide a fully comprehensive ESG risk database to over 475 clients and 40 partners around the world. So what we're doing is, on a daily basis, we're scanning over 500,000 documents from 100,000 different public sources to identify ESG risk issues. We're able to cover 23 languages, and this is really beneficial because often a lot of these problems start at a local level before they're escalated and then reach mainstream media. We identify reported ESG risk issues, which we classify as risk incidents, and our team of over 120 analysts review and subsequently link this risk incident to companies or projects around the world. So this is a quick little loop of our application, and what we're looking at here is a series of different components. So the Rep Risk Index shows a company's individual ESG risk exposure. The Rep Risk Rating acts more as a benchmark and allows companies to look at themselves alongside the industry sector they operate in, as well as the region that they operate in. And a lot of our research is underpinned by key international standards. So we overlay a number of ESG frameworks, including things like SFDR, Sustainable Development Goals, UNGC Principles, and Modern Slavery Act. So via our platform, our data feed, our API, we're providing ratings and scores and analytics, as well as qualitative risk incident information that supports a variety of use cases. And this includes things like index construction and monitoring, ESG risk overlay for investments and portfolio construction, AML, KYC due diligence, risk management, M&A activity, transaction due diligence, alongside that regulations, policies, and international reporting. We've also worked with some non-government organizations such as the UN and SASB to support research and development of their ESG materiality frameworks. So whether you are looking at the impact of mining projects and targeting ESG issues such as human rights or abuse, overuse and wasting of resources, whether you're looking at regional analysis of environmental risks in countries like Asia, and then targeting specific industry sectors such as chemicals, foods and beverages, or you're looking at the health and environmental issues related to specific types of product development, Rep Risk is really an effective tool for identifying, managing and mitigating ESG risk. Our research evolves, and we continue to align to the needs of the industry. Our spatial analytics provides transparency on assets near locations important to biodiversity, and we look at identifying the projects with close proximity to environmentally sensitive sites, and then linking this information to project owners and their operators. Our work is underpinned by 3 pillars: focus, technology, and transparency, and we work with a wide range of partners, including consultancies, law firms, financial data providers, stock exchanges, to really advance the reach of ESG data. We believe that this combination and the collaboration really has the power to change and influence behaviours, and we understand that objective, measurable, and actual data is key. So thank you for your time. I'll be around if you guys want to ask any questions.
All right, so good afternoon, everyone. My name is Martin, and today I'm very excited to tell you more about Silvera. So Silvera's mission is to provide clarity to carbon markets and to become the source of truth when it comes to the performance of carbon projects. Now, why is this relevant? Well, as organizations aim to become net zero by 2050, this commitment will require ambitious emission reductions in line with a 1.5 degrees Celsius pathway. However, it's not yet economically or technologically feasible to avoid 100% emissions reduction globally. For those unavoidable emissions, organizations will have to leverage carbon credits, which creates a huge opportunity for the market to grow. And according to McKinsey, this market is meant to be worth around $50 billion by 2030 and should multiply by 100 by 2050 compared to the start of this decade. Unfortunately, voluntary carbon markets is currently too opaque and lacks the data infrastructure for market participants to make the most of it. from project developers that look to get appropriately funded and defend premium pricing for the performance of their projects, traders and exchanges that look to build standardized contract and long-term offtake agreements and produce accurate pricing information, asset managers that are looking to standardize their reporting, but of course, offset buyers that currently have limited in-house due diligence capability or expertise to optimize their purchasing decisions. So for offset buyers more specifically, the consequences are real. And what that means is that today, what we can see is the different projects out there are not performing to the same standards. And when it comes to making net zero claims, some organizations in the past few years have been called out in their net zero claim and leveraging poor quality credits. The damage have been on their reputation, the share price, but also large investments that have turned into wasted spend. So this is when Silvera comes in. Silvera is a SaaS market intelligence platform for the carbon markets. And really the idea is to assess these carbon projects in depth individually and provide that data infrastructure for these different market participants. It relies on three main pillars, which is first of all the geospatial capability, leveraging data from European Space Agency and NASA, but also LiDAR technology. We look to extract the most of this data with our machine learning and AI modules that we've built. So the third pillar, which is our team of experts, to make assessment in depth on these projects. So how do we illustrate these assessments? Well, we produce top-level ratings. So what Moody's is to bond credits, Silvera is to carbon credits. And when you come back to the problems of these different market participants, you will see that this provides a good metric. So project developers that are performing well are getting funded appropriately. They can defend their premium pricing. Exchanges and traders can build a standardized contract with more data and also long-term offtake agreements. Asset managers can include these KPIs if they're looking to build more KPI-related bonds. And of course, offset buyers now have more data to play with to optimize their purchasing budget and also mitigate the risk of reputational damage. Now, the rating is built on different assessments. First, the carbon score, the additionality, the permanence, and the co-benefits, but separately. Now, what makes us unique? Well, first of all, we build our business to make sure we avoid any conflict of interest. So the only organization that can subscribe is our organization that look to purchase credits or trader that look to build inventory to then sell to their customers. We also go in depth. I mentioned the geospatial capability and machine learning. And the idea is really to identify performance that have gone through the gaps and for projects that have been certified that may not be performing to what they're claiming. And finally, our team of experts, we've built a machine for them to assess this project at pace, so it's become cost-effective and really provide a large group of projects that organization can choose from and optimize their budgets. So we already leveraged by large organization and many more to come. Feel free to come and ask me the question for the rest of the event. Thank you very much.
Good afternoon, everyone. My name's Nick Cox. I'm product marketing with OneStream Software. If you've not heard of us, we're probably approaching ESG from a slightly different angle, which is very much around the actual reporting of an organization. And so from the financial and combining that with operational data. So I'll just talk through briefly what that means. We provide a unified platform, and we're helping an increasing number of customers to bring their own financial reporting through that to produce the financial statements and do planning and budgeting and forecasting. And really, the reason that we've approached ESG is that we're seeing an increasing number of our clients asking to combine ESG data with their financials, so to provide that in an integrated way. And we see this as it's really about these three steps. It's about collecting data, it's about calculating and analyzing that data, and it's about reporting it. And essentially that's what our platform does for organizations to report. And OneStream, in terms of how we see being a perfect fit for ESG, as I said, we're approaching this not from the perspective of investment and understanding. We're approaching this from the perspective of how does an organisation actually report on itself. And I think, from what I've seen on some of the presentations today, it's really important that they get this right and that the data is correct, because it's going to be validated by a lot of the other sources that are out there. And so really this is about effective integration. We have one of the leading integration tools down to underlying transactional systems, ERPs and other operational sources. We have a very strong workflow solution, so users of the system can really understand where they are and how to go about the next part of the process. We have a very, very strong consolidation engine, probably one of the best in the industry, to be able to consolidate against global reporting, financial reporting standards, but that can also be used very effectively around ESG. Reporting, full range of analytics and dashboards, and then the ability to use that actual data to plan, forecast forward, which is really critical. It's about how you can align all of this in one single platform. So it's that point I'm going to hand over to my colleague, who's not here, but she's going to talk you through a quick demo of how this works. Hopefully that comes on. Press one more.
I'll toggle over to the demonstration itself, where I'm now in OneStream, and I'm just going to leverage this very simple homepage to navigate to the ESG content I'd like to go through today. Now, of course, we could go into a long discussion around reporting, showing you all of the abilities around that, as well as our task management, which allows the collaboration where you may have multiple users across the globe that need to input or interact with data, approve data. So task management can really help you with that collaboration. Now, with respect to ESG in particular, I'm going to go through an example of what could be configured within the OneStream application for ESG in particular. So we're going to go through a couple of areas, one including an example of activity metrics here, where you might notice a framework here, SASB, food and beverage framework that we're using as an example in this demonstration. So I have the framework codes, I have the type of data that I'm collecting, which is not always dollar amounts or elements that we understand easily, and then we have the metric name itself. And of course, the input or the value that I'm collecting. The OneStream application obviously allows for manual input. So let me just update this number, for example, and I can save that back into the application. That ability to validate and integrate and drill down on that data to then access the audit log. So the audit log is omnipresent. Here I'm able to see every single interaction in that data cell with a date timestamp. So the audit log is a strong and constant component within OneStream. So just FYI, and you'll notice some green values here, or values that I can't override. That data was already collected in the actuals process, for example, so I'm not double counting my data points. Unit conversions, these are very simple examples here of liters per gallon, liters per imperial gallon, but it could be any number of conversions from scope 1, scope 2, scope 3, calculations that may be needed to perform. OneStream can really help with all of that. Our calculation engine is very robust. So I just want to give you assurance around that, as well as the ability to ensure the data quality that you're capturing or inputting into the application. This is just simply an example where I'm setting up some guide rails for the end users.
There we are. I'll cut Leanne off at that point. So I hope that gives you a little, little understanding of how OneStream works. As I said, I think, coming at this from a very different angle, but this is about maybe your organizations themselves, how do they report, and our customers are doing this, integrating financials and ESG reporting in one unified platform. So happy to take any questions, around afterwards in the event. Thank you.
Okay, good afternoon, everybody. I'm David Curtis. I work for Bond IT. I'm one of the partners, the owners of the company. Pleasure to be here today. I caught the last two presentations, it made me think, actually, we're not a ESG company. We're not a company that's focused on sustainability. We're a company that's focused on data. Okay, if you've got data, we can use that data to build better fixed income portfolios. Okay, this is InvestTech. It's very, very specific. But what I see and what I've heard today is that a huge amount of data is being generated. As was ably demonstrated in the last presentation, that can be used to report on. What we want to use that data for is to build better portfolios. Right? You're the judge of what the data is. You're the judge of what the data is we use. But what we will do is take that data and using either AI or other advanced technologies, apply it to fixed income markets to build better portfolios. So Bond IT is a company based in Israel where we have access to some tremendous technology talent, as well as in Berlin, similarly both big fintech hubs. We have talented programmers who apply advanced technologies to fixed income markets. Okay, but in terms of ESG, you need to come to us with the data that you want us to use. At the moment, we have about $1 trillion of assets using our technology. We have 20 clients worldwide. 0.7% of those assets have some kind of ESG tilt or consideration. It's tiny. I know where that number's going to go. It's going to go from 0.7 to 20 to 50 to 70, probably the whole lot, okay? So we're ready here to use data once it's made available. I'm going to show you very quickly a presentation for what we do, just to give you a little bit more context. I have no idea how to do that using these buttons. Just click right. Just click right. It's as easy as that. Isn't technology wonderful?
The global bond market is valued at around $120 trillion and ripe for disruption. Technology is changing everything. It's time to say goodbye to the investment industry as we know it. Investment management is still relying on time-consuming manual processes, which are prone to human errors, leaving a world of untapped data and opportunities behind. Bond IT helps investment managers stay one step ahead of the market with automated portfolio management and credit research powered by transparent, explainable AI. Our innovative portfolio construction and optimization technology allows asset managers to fully digitize their bond investing. Capture more data-driven insight. Leverage machine learning and explainable AI to spot investments' fallen angels and catch those untapped rising stars before they start to shine. Process huge volumes of data every single second. Sounds better than an Excel sheet, right? Leading financial institutions around the world already use Bond IT, building a lasting competitive advantage by utilizing innovative technology and AI to boost their portfolio. Better performance, greater efficiency, delivering optimal results for their clients. Bond IT helps investors outperform the market.
So please forgive the accent to the presentation. It's a little corny and American, but we are big believers in diversity as a company ourselves. We have 45 people working for us. They're not all American. We have 14 different nationalities. We have women in senior positions in the technology and across other areas of our business. There are three core things. There are three core applications that we do. We apply AI to credit markets. You saw a little bit about the portfolio construction, and then analytics. We have some advanced fixed income analytics. We made a point in the video that's quite subtle, but I think it's a really important one. It's about explainability. Right? Clients don't want black box. They don't want something just to tell them what to do. They need to understand why it's doing it. Now that's why ESG is a really good example of that. Because when we build a portfolio, we can explain why we made the choices that we did in building that portfolio. Okay, so you can drill down using the analytics into any element of those holdings, and it will tell you why that bond was selected compared to any other one. Okay, so explainability. The second point is that we're data agnostic, and I've really made that point. We use any data set that you give us to drive performance, to drive scalability, or to drive outcomes. Thank you very much for your attention. We're looking for clients and we're looking for investors. We've just launched our Series B round. As I said, we have around 20 clients at the moment, and we're doing a fundraising to take us into that next stage of growth. I'll be around outside for the next hour if anyone would like to know more. Thanks for your time.
Hello. Let me introduce you to Tamello. So Tamello started when our three founders were at Cambridge University. They found out that the Cambridge Endowment Fund was about £6 billion. They're all doing sustainability-based degrees, and they said to the endowment fund, how have you been voting on recent proposals that have been going through AGM, so shareholder proposals? Some examples of those kind of proposals. Should Amazon report on how climate-friendly its retirement plan is? Should McDonald's stop keeping pregnant pigs in cages by the end of 2022? Should ExxonMobil report on how it will be financially affected by a net zero scenario? So really big issues that are going through company AGMs, through shareholder proposals. And Cambridge Endowment Fund said, one, we don't have the legal right to vote on these. It's the asset managers that will vote. And then secondly, we have no idea which companies we're invested in. We're invested in funds, but we don't really have a look through into how and where our money goes from an actual individual company perspective. So we then, well, I say we, our founders created Tamello, and our mission at Tamello is to give customers transparency into where their money is invested, and also to give them a voice on issues they care about. And that's where Tamello was formed. So we have, this is a standalone dashboard, but this can be integrated via SSO or through our APIs. This can kind of give you an overview of your portfolio, could be your pension, could be your ISA. So if we go into the transparency piece first, so we get the fund data from whether it's your investment platform, your workplace pension. We take that data, we know what funds you're in, and we go directly to the fund manager, and we get the underlying holdings that you're invested in. We can then start playing them back to you, and you can see exactly where your money's invested. So 3% in Facebook, 2% in Tesla, and you can start to break that down into different industries. You can do headquarters location. So if you really wanted to know if you were investing in any Russian headquartered companies, for instance, you can find out through our platform, and you can search particular companies like Tesla or other companies are available. And you can then start to break it down to different kind of areas like tech, finance, and that's kind of the transparency piece. It's a nice kind of engagement tool if you're in a pension, if you're in particularly a pension or retirement-based product. It's a nice way to communicate with customers. The key thing from our perspective is around votes and giving shareholders a right to vote. Now, at the moment, the asset managers have the legal obligation to vote through proxy voting, etc., at these company AGMs. And what we're doing on our platform at the moment is collecting preference votes from them individuals. So we're going right to the end investor and finding out how they would vote on certain proposals. So we have a content team, so we display all of the shareholder proposals, currently FTSE 350 and S&P 500. We will, as we go more global, we will start working in the US and Australia. We will do more markets and exchanges. And the individual can tell us what they're interested in. Are they interested in environment? Are they interested in equality, human rights? And then we will only surface and ping them votes that they will be interested in. So we break that vote down, and we have a content team which tries to give an unbiased view, and we have lots of checks within that process to make sure it stays unbiased. We're not here to be activists. We're here to create a platform that people can give their views. So we have a shareholder view, we have a company view. So this one, should eBay consider how the CEO's pay compares to the average employees? And at the bottom, really small, it said, I would like my fund manager to vote in favour or against. We collect all that data, aggregate it, and we can pass that back to the asset management company. So really interesting. Everyone's talking about data today. This is a new type of data, we believe, going from the end investor and how they feel about actual shareholder proposals that are going through at these big companies. So they can continue to look at how these votes are going through, and then they can look at their own vote results, and then to kind of complete the loop, we tell them how the AGM voted, we tell them how they voted, how their fellow members of the platform voted, and we tell them how their fund manager voted. And that's a really interesting piece, because you can start to see how your views align with your fund managers. And from a fund manager perspective, we also give them space on this page to say, sorry, we're talking really fast, space on this page to say, why did you vote that way? So you can start communicating back to your end investor. So it's not just a case of you have these great stewardship teams doing really good work. tell your end investor, because that's a nice way to have that communication backwards and forwards. We can integrate this into apps, dashboards, platforms. So we work with investment platforms, pension companies, fintech, digital wealth managers, IFAs, etc. Lots of different businesses. And then we take all that data, we give it back to the asset management companies. That's the shareholder platform. We also have an institutional platform. We also have an institutional platform as well, which collects all of this data, all of the fund data that's going on at these shareholder proposals, and then we can play that back to like trustees, anyone involved in stewardship, and you can have a full view all around shareholder proposals and use this as a way to communicate with your fund managers about key issues that are going on in the world. And we believe if we give more shareholders a voice, we give more stakeholders in the process a voice, we can start making big change at big companies, and that will have a massive impact on hopefully how the world moves forward. Thank you very much for listening.
Hi everyone, I'm Stefan. I look after banking at Persephone. Persephone is a client management and carbon accounting platform that helps organizations, both large and small, to transparently meet their carbon disclosure requirements. Let's take a look at one of our customers. Hoover Circular Solutions is a provider of industrial packaging solutions. They service end markets such as chemicals and refining. So they operate in what's called a hard-to-abate sector. It's a sector that's hard to decarbonize. Now, if you find yourself operating in such an environment, there will be an increasingly large number of stakeholders that will ask you for one thing, and that's a credible transition plan. Now, Hoover has started taking climate action a long time ago. They really see sustainability as a way to differentiate their business. The thing that they were lacking was transparency, and that's why they started working with Persephone. With Persephone, they started calculating the scope 1 to 3 emissions across their global operations. They update data on a monthly basis in an automated way, and they specifically like the ability to drill down to the individual facility level, to the individual site level, to really identify the places where they need to reduce. Now, that's not what reality looks like for most. The Greenhouse Gas Protocol has been around for 25 years, but yet 90% of carbon accounting happens in Excel. Our co-founder and CEO, Kentaro Kawamori, he ran into this problem firsthand, and that was when he was the chief digital officer of Chesapeake Energy. When he was tasked with calculating their footprint, he realized that the market is dominated by consultants. It requires a lot of subject matter expertise, so it's hard to get the job done, and it's all Excel-based. So in conclusion, he figured that's not a scalable solution, and certainly not regulatory grade. And that's how the idea for Persephone was born. So Persephone brings a new approach to carbon accounting. Historically, carbon disclosure was really a reputation-driven exercise. It's been based on backward-looking, totally outdated data, and really couldn't be used to inform business decisioning. Now, where climate is sort of like really starting to become part of mainstream capitalism, there's a need for much more dynamic, much more timely data to drive business decisioning. And secondly, historically, carbon accounting was incomplete and therefore hardly comparable for one company to another. Now, as global standards start to converge, finally, and rules start to become more and more clear, there's an increasing need for more holistic disclosure, and that's across scope 1, 2, and 3. If we look at financial services, one of the most common challenges that we hear is around data availability. Now, it's important to notice that that's exactly what PCAF, the Partnership for Carbon Accounting Financials, what that standard has been designed for, right? It's been designed for it to give financial institutions the means that even in places where data availability is scarce, they can still estimate their footprint. And that's what Persephone can support with. Now, finally, carbon accounting is complex. It's not easy to do. Now, we are on a mission to make carbon accounting feel simple. We recently made our platform available to a group of Harvard students. They used it for one of their class projects, and their feedback was, it felt like cheating. Let's take a look behind the curtain. Well, in fact, the beauty about Persephone is there is no curtain. We take a no black box approach to carbon accounting. What you see here is our carbon activity ledger, which converts activity data and transaction data into verifiable carbon footprint data. The way we do it is we follow the standards. We follow the Greenhouse Gas Protocol, and we follow PCAF. We've codified currently a total of 120 calculation methods. That number keeps growing. And those calculation methods, those formulas that live in the platform, they're fed with data. On the one hand, that's our client's data. So that's activity data, financial transaction data. And on the other hand, external data. That's data we bring to the table. A total of 107,000 emission factors that we constantly keep updated. The result of that is a highly granular, transparent, and easy to audit view of both your operational, in the case of financial institutions, your finance emissions. You can then use that to set targets, track progress, etc. So different to the stories that we heard this morning, where people start making commitments without knowing what the baseline is. And you can also benchmark your performance against peers. If you're financial institutions, you can also benchmark the performance of your customers against their peers. Today, we calculated a total of 8.5 gigatons of carbon dioxide equivalent. 98% of that is in scope 3. And it tells you there's a whole lot of finance emissions in there. In fact, TPG was one of our first customers, and then they became an investor. We raised a total of 120 million to date, which mostly goes into our headcount. We have a total of 310 employees. Now, almost half of that is in product or engineering-related functions, because we are here to build a scalable solution. We work with customers currently in 18 out of 28 sectors, so it's an industry-agnostic solution. And we've recently been rated by Forrester the #1 solution for banks and asset managers in need to automate greenhouse gas accounting. We look forward to deepening conversations around financial services use cases with you over the course of today. Thank you.
Hi everyone, I'm Oliver Evans, Director of Client Development at Predicat. So Predicat is a liability emerging risk analytics firm. We identify emerging risks, map those risks to companies, and quantify their potential liability in US courts. Our data and analytics are used by the world's leading casualty insurers to underwrite and manage accumulations of emerging risk, and we are now working with our clients on ways to embed our emerging risk analytics to further their ESG goals. In the 5 minutes I have today, I'm going to, one, show you how casualty underwriters use our product, two, explain how we develop our emerging risk information, and three, discuss their application to ESG. And apologies how rudimentary some of these slides are compared to some of the demos that we've had today. But anyway, you can see on the screen here a screenshot of a company profile on our emerging risk platform, which is called Cometa. And the company risk score that you can see, which lies between 0 and 100, measures the likelihood a company will be named in bodily injury or property damage, litigation, and the severity of that litigation should it occur. The fictional company you can see, Tangled Industries, has a risk score of 91 and a 63% chance of litigation over our 8-year forecast window. And severe outcomes as well should that litigation occur. You can see in the table below that the elevated risk score that this company, Tangled Industries, has stems from its connection to PFOA, which is a PFAS, DEHP, which is a phthalate, sugar, addictive software design, industrial meats, and microplastics. With the company risk score, underwriters can quickly assess whether they need to adjust terms and conditions to mitigate specific emerging risks of concern, and whether their underwriting actions are consistent with the carrier's risk appetite. Science is at the core of Predicat's approach to identifying emerging risk. Our algorithms continuously comb through the world's scientific literature. We read about 35 million independently peer-reviewed scientific articles, and we're looking for studies examining business practices that can lead to bodily injury or property damage. We then extract this data from those studies to quantify strength of evidence for specific hypotheses of injury today and in the future. And we do this because science drives liability in US courts. Today's science forms the basis for tomorrow's litigation. To make this science information useful to casualty insurers, we map the business activities of companies to the hundreds of emerging risks bubbling up from the scientific literature. We do this by cataloguing the specific business activities of companies conducting business in the United States and internationally, and then employing a wide variety of public data sources to assess the likelihoods that each company is engaged in activities that could one day drag that company into a mass litigation event that has yet to transpire. Predicat is essentially in the business of anticipating which companies will be named in the next asbestos, next opioids, or next glyphosate mass litigation event. So the relevance of this information to ESG is clear. Predicat's company risk score is grounded in an objective and scalable approach to identifying and quantifying emerging risk. It's based on a company's current and historical operations and how those operations could lead to bodily injury or property damage. And it's weighted by liability, which provides a strong indication of how much society actually cares about the potential harm caused by a company's operations. We're now working with clients on embedding this information in their view of ESG. Use cases include monitoring ESG performance of underwriting and investment portfolios through emerging risk insights, communicating with insureds about the emerging risks that drive their ESG performance, and pricing and reserving for emerging risk in a manner consistent with corporate ESG goals. So if anybody's interested in discussing further, my email address is oliver.evans@predicat.com. Thank you very much.
Okay. Financial markets Financial markets generate every second tons of data, ESG data as well. But not everything is so necessary or relevant to predict asset performance. But AI can be a solution, and asset managers need to deal with this enormous amount of data, and they need to innovate their investment process to have a competitive advantage. AI, and in particular deep learning, can deal with this enormous amount of data, and but they need to have good results, years and years of R&D. Although 85% of asset managers agree that AI solution can have a better performance. Hi, my name is Francesca Campanelli, and I'm Chief Commercial Officer of Axion AI. Axion AI is a small fintech company with a big dream. The dream is to bring AI and deep learning to the investment industry. We are a team of experts, machine learning experts, and with a sound experience and knowledge in financial markets. Our AI solution, our Axion AI solution is based on a very solid infrastructure. Is a machine learning infrastructure, is a platform that is called Axion Iris. But from the beginning of our journey, we focus on the process, to have a robust process that is very, very important in this. And we can apply our process also to ESG data. ESG data have a lot of challenges. The first one is the quality of ESG data, because it's very heterogeneous, and the predictability of these of ESG data that is not guaranteed, and the integration of ESG data in an existing investment process. So we addressed all these challenges of ESG data into our Axion Iris platform, that is a web application ready to use. As you can see, we have a section dedicated to predictions with different prediction horizon, 1 month, 3 months. And we have also another section dedicated to strategies. So it's possible to build with predictions, also strategies that could be long-only strategies, long-short strategies, or enhanced index strategies. And we applied our methodology also to ESG data. So we started with the investment universe that is ESG compliant, is very common, is MSCI Europe SRI. And then we use in our dataset a number of ESG scores. So we use ESG data to have predictions. And then we use these predictions to build investment strategies. In some cases, there are long-only strategies, so the best stocks using ESG data and their predictive power. So this is our methodology applied to ESG data. But I'd like to talk about more in detail about this and the advantage to use AI in ESG investing, especially in equity investing. So please contact me, do not hesitate. We can provide more information. And I just want to leave you with a message. Artificial intelligence, and in particular deep learning models, are very, very powerful. But at the same time, they need a lot of experience, and they need a lot of experiments. So it's not easy. But yeah, thank you. Thank you for your attention.
Good afternoon. This is the one you've been waiting for, the last one of the day. It's totally different than everybody else you've seen today. So everybody today has talked about data. Curveball Adventures is pioneering zero fossil fuel energy positive real estate. This home you see in the center is a 5,000 square foot home currently being built in Kent. It'll produce about 800% more energy than it consumes. But yet a very traditional home. The problem is real estate is currently one of the largest consumers of fossil fuels. The UK's already put a mandate by 2025, homes can't be built with fossil fuel use anymore. PLCs don't really know how to adjust to that. It takes younger, innovative companies really to take that solution there. So real estate can be one of the largest producers of renewable energy. We do holiday lodges, we do residential homes. Holiday lodges are producing 21,500 kilowatts, yet they're only using about 1,500 kilowatts. So you think about from an investment perspective, you really ramp up your return by looking at holiday lodges that are doing energy positive results. And we're about to put 80 of those up in Scotland in the next month. The homes are producing between 400 and 800% more energy than they consume. It depends on the level of solar that you're using. So the benefits, of course, zero carbon emissions. They're not using any fossil fuels. So there's no energy bill. They're producing more energy than they consume. The home at the top is a model home that we've built. That one, you can drive an electric vehicle about 40,000 miles a year on the excess energy or sell it back to the grid. We meet 9 of the 17 UN sustainability goals. So as opposed to being a company that's trying to figure out how to fit into ESG, we are ESG by definition and from the get-go. So there's a lot of different things you can do with that surplus. You can charge your electric vehicle. You can divert the power back to other buildings, as we're doing with the one in Kent. It's going to do a 4,000 square foot office off to the side that he's going to power from his home. You can store it in batteries and use it at any time. You can sell it back to the grid. Totally up to you on what you want to do with that power. But it creates, again, new revenue streams that homeowners have not thought of in the past, or even real estate investors. We started in 2018 with CurbBlock, with the idea to build this carbon zero energy positive residential development model. The long-term goal of CurbBlock is to actually bring this to the retail investor marketplace. As many of you probably know, retail investors have been excluded from real estate development as an asset class. We want to change that. Today, what we're doing, the CurbBlock Technologies, we're selling a lot of these products that are going out across the UK. It is all based here in the UK. And then we're about to launch CurbBlock Net Zero Real Estate Fund in Q3 of this year, which will be a professional investor fund for people to invest in this type of model. We have to start with the FCA somewhere to prove the model, and so we're starting that in traditional format while we work towards the long-term goal of retail investors. And that's what CurbBlock is up to. A lot going on, in a lot of ways to get involved. I'm one of the founders and the Chief Revenue and Compliance Officer of CurbBlock, and happy to answer any questions or talk about whatever it is that we can discuss in the meantime. And thank you all for sticking it out and sticking to the last one.
Thanks, Joey, and thanks to all the presenting companies. If you have any questions about their products or the demos that you saw today, feel free to reach out to them on the Brella app or just grab them in the networking break. I'm sure they'll be more than happy to share more information about what they're working on. So that brings us to the end of the demo stage. We're done, finish a bit early. So if you want to join in the main stage and finish the panels over there, if not, enjoy a well-deserved coffee and refreshment before we wrap up in the main stage. So we have our ESG risk assessment panel coming up with industry leaders from Nomura and Federated Hermes. So one not to miss. And if you stick that out, you can enjoy a well-deserved beverage at the end. Thank you. Yeah, no worries.